Are you feeling overwhelmed by the changes in the real estate market? Well, you're not alone. In just a few minutes, I'll break down the latest trends that are shaping our buying and selling landscape. By the end, you'll have insights you need to make informed decisions, whether you're a current client or just curious about what's happening. Let's dive in. All right, so it's the end of the third quarter in 2024 here, and wow, lots going on in the real estate market. So kind of some key themes. The market is definitely shifting, and this last half of the year, it has shifted a bunch. Inventory of homes on the market continues to rise. The pace of sales is falling just a little behind last year's pace. And then interest rates have popped back up a bit. And, really the market is behaving differently depending on the price point. And we'll dig into that here in a minute. So two of the biggest market drivers for 2025 are going to be mortgage rates, because that's really going to dictate demand, and active inventory on the market, which is the supply. Economics 101. I'm going to start talking about national level stuff here real quick, and then we'll break down the local market for you. So nationally, Realtor.com has this market hotness index. And when you look at the market on a national level, Iowa is actually ranked 257th out of 300. And we're considered a cool to very cool market, which is interesting. As I kind of look through some of the other markets, I'm not sure exactly how they're calculating this. And if you go back year over year over year, we've been a cool market forever. So I think that's probably skewed a little bit. I think it probably just has to do with the fact that we're a smaller market. But from a national standpoint, we appear cool compared to some of the other markets. So every day I tune into a show called The Hot Sheet, or at least Monday through Thursday. They do a great job breaking down what's going on the national level from a real estate standpoint. And I think the big news right now is the fact that mortgage rates have popped back up. And as you can see here, the 10-year Treasury has popped back up. We thought when they lowered the Fed funds rate that we were going to see some mortgage rate relief, and all year long they've been talking about rates going for a year and a half. They've been talking about rates going down, and you know what, they've come down a little bit this year, but they have not come down like people have wanted, and that's got a lot of people sitting on the sidelines waiting for rates to get to a point where they're comfortable making something happen. National single family home inventory. On a national basis, we have 33% more active listings on the market than we did last year. It's a big number, and I think our local market's reflecting very similar information. Mortgage applications are trending downward again. As you can see, all year they've been actually kind of lagging behind 2023. We just crossed over kind of where we were in 2023. I think that's a reflection of that little blip down in rates, but as rates have popped back up, mortgage applications have gone down. Again, just another reflection of more active listings on the market than we've seen for a few years. So the Burgundy is this year. As you can see, we're ahead of where we were the past 2 years. Again, national level information. I think this one is the most shocking slide. The Atlanta Federal Reserve is looking at home affordability, and the gold line is U.S. median household income, and the light blue line or teal line is the qualified income to afford a U.S. median home. And, back here, the line crossed in probably about 2021, and the median income was around $70,000, and that was what was required to buy a median priced home in the marketplace. And as you can see during COVID, or towards the end of COVID here, the affordability has just gone clear out of whack. And some of that's due to low inventory and, massive acceleration in home prices. Some of it is frankly due to interest rates going up so high, and it's a double whammy, frankly, for the marketplace. And so You can see back here in 06, 07, 08 when affordability was not good. This is probably the worst it's been in a long time. Don't have a further look back than that, but pretty dramatic change. I mean, we had a nice long run from looks like about 2009 through about 2020 or early 2021 on affordability, and that is just out the window right now. Let's talk local market here. So this is Central Iowa market. As of the 21st of October, we had 3,953 active homes on the market. So we're just shy of 50 short of having 4,000 homes active on the market. It's been since, looks like spring or winter, maybe January of 2020 since we've been at that level. And it's taken several years for us to recover. And it's interesting to see we're popped back up there, and we'll see. I think we're going to see inventory continue to grow. The market has really segmented itself out. This is a comparison of inventory counts by price point, looking back to May of this year versus September of this year. And as you can see, back in May, there's a pretty good solid seller's market all the way up to 500,000. Very strong up to 400,000. You got to more of a neutral market in the 500 to 700. And then, a couple of the upper price ranges were actually buyer's markets. A couple of price points were, neutral or even a seller's market at 8 to 900. I think that 8 to 900 is an interesting place. I think the numbers are skewed in that range for some reason. Talking to a lot of agents, there's some funky stuff going on in that price range right now. So I'm not sure what's exactly going on there. I think it might just be a small number of inventory and a small number of transactions going on there. But look at the difference that we see in September here, where we've got now 300,000 to 400 is neutral, 400 to 500 is neutral. And we've got quite a bit more inventory, months of inventory on the market than we did this spring. The 700 to 800 is still considered a buyer's market, although inventory has come down a little bit there. But then, boy, look at the 900 and above $1 million have really popped up inventory wise, and we're almost up to a full year's worth of inventory on $1 million and above. And we haven't seen that in quite some time, and so that's really pumping the brakes on that part of the market. As you can just see here, it really shows this clear market segments, basically 300 and below, 300 up to 700,000, and then 700,000 and up. And all three of those segments are different, and they're all three behaving differently. Price reduction. So the black line is price reductions at the same period last year. And then we've got what's going on this year. And so again, as you can see in September, we've got just under 4,000 homes on the market. So we're seeing 35 to 40%, which is a national trend as well, of homes see a price reduction, recent price reduction each month. This, again, a breakdown by price point of where active inventory is sitting and where sale pending are happening. And as you can see, that kind of 200, 300, 400 area is where the bulk of the inventory is at. That's where the bulk of the transactions are going on. And again, as you can see, getting up to those higher price points, there's not as much inventory, but there's a lot more inventory than there are transactions going on. And so that's where that inventory numbers are coming from. Great representation here to kind of show you how sales are lagging behind last year. So 2023 is the black line, 2022 is the blue line, 2021 is the orange line or gold line. And the red bars are this year. And so you can see kind of basically May, we were right in the mix with the past couple of years. And then all of a sudden in June, when normally transactions should take off. So June, July, we should see a lot of transactions. It should be the May, June, July, the bulk of the transactions of the year. June, July, and August and September, the market has been a lot quieter than we've seen the past few years. And again, that's helping that inventory build. We're starting to see some pressure on pricing, as you saw with the price reductions because of that. Let's talk mortgage rates. So the bottom part of the chart is where the Fed funds rates have been. And so as you can see, back in January, February of 2022, the Fed funds rate was at 0.25%, which is basically zero. And that's just unheard of. And then we've seen a steady progression of rate increases through August of 2023. And you've seen mortgage rates follow suit. Now you have seen the spread between mortgage rates and the Fed funds rate narrow, which is great. You did see rates pop up here. And then we saw rates come down, and rates got down right to about 6%. Mortgage rates got right down about 6% back in September. But boy, they just pop right back up, and they're in the mid sixes now, and they keep going up just a little bit. So it's going to be interesting to see what happens in mortgage rates. There's a lot of people watching that. There's a lot of people sitting on the sidelines. There's a lot of people that want to know what's going to happen. With rates coming down a little bit, it has improved buying power, though not a lot. You can see you can buy just a little more house this year than you could last year based on a $2,000 payment. But pretty just kind of hanging in there. I would say that's a pretty straight line across if you want to look at a trend. So again, the three market segments to focus on: up to 300,000, 300,000 to 700,000, and 700,000 and up. You know, right now, up to 300,000, it's going to remain in a steady state seller's market. You know, builders just can't afford to build 300 and under. There's not a way to add single family homes to the market there. It's pretty tough to add townhomes even in that price point. And, you know, that inventory keeps on getting snatched up, and you got a lot of people in that price point that have very low interest rate loans. And I think inventory is going to remain tight in that price point for the continued, you know, near future. At least I think we've got the potential. I just don't see that changing anytime soon. So we're not even going to go beyond that. It would take a major economic upheaval to create some opportunity there, and that would be a bad situation for everybody. So this is going to be is what it is. Again, looking at that, you've only got a couple months of inventory. So if no other home came on the market, you're going to sell everything in those price points in a month or two. 300,000 to 700,000. This part of the market has really shifted to a neutral position. They are adding new homes, and there are more people putting their homes on the market. And so affordability is definitely a factor in the moderation of this segment. This market segment is much more interest rate sensitive than the higher price range. And I think you're going to see the brakes continue to be pumped on this. I think you're going to see builders try to add inventory to this part of the market, but I know builders are being cautious right now. So I think 300 to 700,000 is probably going to be it's going to remain in that neutral area. I'd be shocked if it goes into a buyer's market, but I would say if rates go down if mortgage rates go down a half a point to a full point, if we get down in the mid to low fives, I think you're going to see that 300 to 700,000 go right back into a seller's market. And I think you're going to start to see prices in that segment go back up. I would say that I do think there is some downward pressure on prices in this segment right now. I think particularly homes that are not perfect, homes that maybe need some updating, homes that have some wear and tear, homes that don't have some extra bell and whistles. I think you're going to see some downward pressure on pricing. And I think you're seeing that in the price reductions. I'm helping people, helping some buyers in this price point right now, and you're seeing listings now sitting out there in this price range, like in the 400s, you're high threes, low fours. You're seeing listings sitting out there now for 50, 60, 70 days without selling, and lots of price reductions going on. So there is definitely some downward pricing pressure in this segment right now. But if rates move down, that's done, and prices are going to hang in there and maybe even start to go back up. And I think you'll see inventory shrink down again too. So again, you can see there we've got that kind of middle range is all neutral right now. it's still down close to that 4-month line where it turns back into a seller's market. And so again, won't take much, half a point down in interest rates. And I think you're going to see maybe that go back. Some of those segments go back into a seller's market again, and inventory start to shrink. 700,000 and up is kind of the elephant in the room right now. Again, we looked at, I'm going to go back to this slide. Look at the difference from May to September, particularly in this $1 million and up. There's a lot of homes. Hang on a sec here. I got to get back down there. There's a lot of homes. There's well over 100 homes, probably like 124, I think, homes on the market that are $1 million or above right now. That's a lot of homes on the market. And, and I've got a listing, and I know some other agents that have listings in this 800,000 range. I'm not sure why that is showing up with being a seller's market, because the activity that we're seeing in that part of the market is not showing a seller's market right now. So I think that might be a little bit of an anomaly, and I think you'll see that number adjust here before the year's over and pop up into a buyer's market. But, if you've got a home that's in that 700,000 and up level, there is a lot of, your house is sitting on the market for quite some time, and there is going to be definite downward pressure in pricing. Prior to COVID, there would take, there weren't that many $1 million homes on the market every year. There weren't that many that sold. And when they, a lot of times it took a year, maybe 2-3 years to sell $1.5 million, $2 million home. And during COVID, that just went out the window when interest rates went down so far. But I think where we're at in the market right now, I think we're going back to normalize the very high end of the market here. And I think you're going to see, I know you're going to see time on the market stretch out quite a ways. I think you're going to see either downward pressure on pricing, or homes just fail to sell. And it kind of depends on if the seller needs and wants to sell the home, or if it's not a big deal. I think you'll see some people take their homes off the market. I think that may actually impact these inventory numbers, because there's a chance that you'll see, as this year goes on, some people take their homes off the market. I also believe that there's a lot of baby boomers that have higher end homes, and I'm very nervous that next spring you're going to see a ton of homes come on the market in that 700 and up range. I think there's a potential to see a real glut of nice homes on the market. Some of them are going to be kind of dated, and those homes are going to really struggle to sell, I think. And I think if you have one of those homes, if you're thinking about selling next spring, we should be talking, because I think you're going to have to be really careful, and we're going to have to, you're going to have to make sure you're either pricing very aggressively, or you're going to have to make sure that your home presents to the market in a way that it stands out from the crowd in a great way. It looks spectacular, and it is the clear choice for the market when people are out shopping. Location's going to matter. Price point's going to matter. Style's going to matter. I mean, you get up, people are picky when they're spending a lot of money. Their money's not going as far. And as long as rates are continuing to be up a little bit, that 700 to $1 million range is going to be impacted by those interest rates. And buyers are going to be picky. The above $1 million, I think there's going to be more of those properties come on the market. I think people still think their home is worth more than it actually is. And, there's a lot of those listings that are struggling. And again, the absolutely spectacular homes, the absolutely spectacular ones are selling. New construction selling, the just one of a kind properties that are just, 5 stars all the way around. No derogatory things with the property. It just shines. Those homes are still going to sell. But if your home, if you're in that 900,000 and up, million and up, and your home's got some deficiencies, I think it's going to be really costly for you. And I think you really need to think about remedying those things, because if you want to sell your home, buyers are going to be picky, and you need to take care of those things and make sure your home presents its absolute best, because you're going to have one shot at that buyer when it comes by. And there's just not that many buyers that are shopping 900,000 and up, a million and up. You miss a buyer, and you might have missed, 5% of the market for the year, and so that one out of 10, 1 out of 20 might make your home sit for quite some time. So you want to take full advantage of people coming to see your home. And so, again, preparation is everything. Pricing is everything. Everything's got to be firing all cylinders at the luxury end of the market to get that home sold in a fairly timely manner and make it happen. So what do I see next in the market? Well, I think the market's going to continue to operate in different segments. I think, as I laid it out today, up to 300,000 as a segment, 300, 700 as a segment, and 700 and up as a segment. Again, there's a great chance that 300 and under is just going to be in a perpetual seller's market. That part of the market is just kind of locked up due to low interest rate mortgages that owners have, limited availability, not being able to build more. 700 and up, I do think there's going to be a big inventory increase in the spring. I really am concerned about this. I think we're looking at that on a national level, and I think where we're at just, demographically in society, I think there's a lot of people that have been waiting to list their home, particularly baby boomers. I think you're going to see them come on the market, and I think we're going to see inventory numbers this spring that we haven't seen in a long, long time. And I think there's a chance that in central Iowa, we see listings get up to that 4,500 to 5,000 range. I don't know. I don't have a great crystal ball, but based on where things are going right now, which, if you asked me earlier this year where we'd be right now, I'm not sure I'd tell you I'm not sure I was accurate this spring, although I was careful. But I really think we're going to see inventory take off here this next spring, and it's going to be a great opportunity for buyers is what it comes down to. And I think once we get past the election, I think, we're going to really have a much clearer picture of what the 2025 market is going to look like. I think, right now, sitting here late October in 2024, I think the oxygen is getting sucked out of the marketplace by the election right now. There's a lot of uncertainty. There's a lot of chaos. And I think once we get past the election, hopefully we'll get a little clearer path. But, inventory and interest rates, those are the two biggest things. Insights for sellers. Pricing it right is more important than ever. Overpricing is going to be your death when it comes to the marketplace. And it is going to cost you a ton of money in your pocket if you overprice your listing. I can't state this more direct. Don't do it. Your home probably isn't worth what you think it is right now, and you need to talk to a professional, and you need to make sure you're pricing it to sell. Your home must be the best product on the market. If it's not the best product on the market, when people are looking at the pictures and looking at the price, they're just passing it by because they need to be compelled to make a move right now, and people are just sitting and waiting, and they're waiting for the right house to come up. A lot of buyers are not in a hurry. And so, you have to be, again, your listing has to be firing on all cylinders. It's got to be amazing. It's got to be priced amazing. It's what has to happen. Stage your home to sell. I can't tell you how important staging is. It's, we live in our homes differently than what it needs to look like to sell a home. And if you don't believe in staging, you're going to become a believer over the next couple of years, because if you want to sell a property, it's what it's going to take. And when you tell somebody that you're selling your home, you're telling people you don't want this house anymore. And what you have to do is you have to make your house appeal to as many buyers in the marketplace as possible. Now, we can't make everybody love your house, but we want to make sure as many people that see your house think it's amazing as possible. And that takes staging. Again, I want you to expect buyers to be a lot more picky. They're going to pass over houses that need things done. They just are going to do it. They can't get themselves, they don't have the money to spend, they don't have the time to spend, they don't have the desire, they don't have the ability, they don't know anybody that can do the work. Buyers want move-in ready, buyers are picky, and they're going to be pickier as their money doesn't go very far and they have more options. They have the ability to be more picky, and so you got to know that going into things. And buyers, be picky, because you're going to have the opportunity to do that. And lastly, home inspections are going to come with a list of repairs. There is no way around it. Even during COVID, there's just what do you call it? An expectation. There's just frankly an expectation in the marketplace that sellers will give something on a home inspection. Very rarely am I able to negotiate nothing for my sellers. I just tell my sellers, expect a few $100 up to $1,000 potentially of things. Expect it to be a little bit of a pain in the butt. And we just need to know that going in, because it's just an expectation in the marketplace. And some of it is driven by buyers. Some of it is driven by buyers agents. It is what it is. It's a game. We just got to play the game and play to win. So insights for buyers: know the dynamics of your price range. You need to know there's homes that are overpriced, and there's going to be opportunities to write offers on homes that are overpriced and get a little bit of a deal on those homes. This is the first time I've probably said that publicly in quite some time, probably in years. But now is the time, like this fall, this winter, now is the time to write offers and get an opportunity. That being said, the best homes are still extremely competitive. I just had a buyer miss out 2 weeks ago on a house that was over on Franklin and Beaverdale, and this house was amazing. Went there on a Monday. They had a big open house on Sunday that my client went to. We went on Monday, didn't have any offers yet. We prepared a cash offer. We actually wrote it for over asking price with an escalation clause. Found out there was another offer coming. We were willing to go. This house was priced at $389. We were willing to go up to, I think, $410 or $415 to win, and we lost. And we lost because the other offer was cash, similar price. They waived home inspection. So there are still houses, the amazing houses are still going to be extremely competitive. And so when you see one, you got to be aggressive and jump on it right away, and you're not going to get a deal on those houses. But you're going to be happy you bought that house because it's the greatest house in the market. Know your finances. Order of operations can reduce stress. Do you have a home to sell? Can you buy your new home first? Everything I'm telling you here might make you scared to do that. But trying to time a purchase and a sale is very tough. And if you have the finances, having a clear understanding of your finances, having a clear understanding of financing, that will help you win no matter what the market is. And you know what? As a buyer, we still might find the best opportunity off the market. I've got my Perfect Home Finder program where I'm able to go find homes off the market for people. If we're just not finding it on the market, I'm not afraid to go off market and see if we can go find that maybe somebody's thinking about selling. They just haven't put their house on the market yet. That can be an advantageous situation for everybody depending on what's going on. So you still might be able to find the house that you want. The best opportunity might be off the market. And then interest rates. If you're waiting for interest rates to go down, I think you're making a mistake, because I don't know that they're going to go down like people want them to. And if they don't go down, then today's interest rate is great and it's going to be what it is. If rates do go down, the market is going to heat up, prices are going to go up, and it's going to get much harder to find a house. And if rates go down in the future and you buy right now, you got the ability to refinance at that point. So I'm going to tell you, as a buyer, the next 2 to 3 months, maybe 4 months before the spring market, so October, November, December, maybe even January of 2025 is going to be the best opportunity to buy a house that you've had in the last 5 years, probably. I mean, it's just the way it's going to work out. So, well, that's the end of my presentation. If you have any questions about what's going on in the market, hopefully I covered everything that you might want to know, but feel free to reach out. Happy to have a conversation about any of these topics. I'm Tom Miller with eXp Realty, and we'll talk to you soon.